U.S. stocks lost steam on Friday as the recent rally took a pause. The rally followed hopes that the Federal Reserve would end its rate hike campaign soon. Global stocks got a lift from growing expectations that China will have to boost stimulus as its recovery stumbles. In economic data, the University of Michigan Consumer Sentiment Index showed consumers are slightly more confident about the state of the economy. June preliminary numbers came in at 63.9 compared to expectations of 60.5. Now, I've always found it a good idea to keep an eye on politics, as the stock markets can be significantly influenced by political events. With that, let's check in with this week's politics. Former President Donald Trump's latest indictment could land him in prison for a bit of time if he receives the maximum sentence for all 37 criminal counts he faces. To be more specific, Trump is facing up to 400 years in prison. House Oversight Chairman James Comer revealed Thursday that he expects there is evidence of at least $20 to $30 million being made in illegal payments by foreign nationals to the Biden family. So just think of that compound interest for the Bidens if they were facing 400 years in prison. And lastly, during a discussion with Joe Rogan, presidential candidate Robert F. Kennedy Jr. admitted that he is putting his life in danger by speaking out about the assassinations of his uncle and his father, and that he takes precautions to ensure the CIA doesn't kill him. Now, in my opinion, RFK needs to be a bit more careful because isn't Joe Rogan a CIA agent? And let's now check in with the volatility index. So we're looking at the 2-year weekly chart on the VIX. And as you can see in the upper left, the symbol is $VIX using stockcharts.com. And basically, the VIX is the inverse of the stock market. So when the stock markets head up, the VIX heads down. And that's exactly what happened, a complete collapse in the VIX because the markets are heading on up. And what this means is that the collapse also in the RSI up here in the upper portion of the chart, as well as in the MACD in the lower portion of the chart, I think we have some more room to run. That doesn't mean it's going to be straight up. It just simply means that the least resistance for the stock market is on the way up. Let's go to our charts. So to mix things up, we're going to take a look at the 20-year monthly chart on the SPDR's Dow Jones Industrial Average ETF. And the symbol in the upper left, as you can see, is DIA. And the close on Friday was 342.95. So this bottom here was the October low when the markets headed on down. Subsequent to that, we've moved up and we're riding along the 20 EMA here. But for the most part, you could say that we're going sideways within this channel here. Now, let's go take a look at the oscillators on the way down. Volume's going to tell you nothing, but the MAC does. You can see this was the plunge there in October of 2022 on the way down. We did recover, at least the fast line did recover. It's above zero, so it has strength. It recovered, but it's been going sideways, and that's what's happened to the price chart as well. But it's closing in on the slow line, which is moving on down here. So soon the fast line is going to cross through that slow line, and it's above zero, so it has strength. So that is another sign that things are looking pretty good, at least for the near term and maybe the midterm. Moving down here into the histogram, you see pretty much the same thing. A pretty good run all the way up here. We have another month or two, perhaps, before we cross over that zero line and up into positive territory, so keep an eye out there. Here, the price rate of change, pretty much the same thing. Nice bottoming and basing. The maximum low at that point in October. The move on up with the fast line moving above the slow line. We're still below that zero line, but it is strengthening. So it's telling you also that the stock market should be moving up. Now, unlike in 2020 where we had a V-shaped recovery, this is more of a U-shaped recovery, that U-shape being in the price chart. So averaging in continues to be the best advice that I could give. Into the RSI, we're at a relatively moderate 55.53 with some sawtoothing just above that 50 or midline, sideways here with a, say, small channel like that. We need to break up and above that line there. I think it's coming because that's what's shown here in the stochastics, with a nice move on up above that 50 line, gaining strength, continuing on up. And here we have the Williams, which is oftentimes the fastest oscillator, either up or down, and it's already up here in that negative 20 to 0 level, which means there is strength, and this oscillator should pull the other oscillators up into these upper territories. Maximum negativity at that point, and nice sharp move all the way on up. So given that the VIX is pretty weak, collapsed, and is way down, you have time. Doesn't mean things are going to move quickly, so you do still have time to pick those stocks, look at their long-term charts, and be prudent and patient. And for today, that's ChewDog Charts. Thank you.